All right.
Really? Because I'm checking YouTube, it is saying that it is waiting for Stonfi. Ah, okay. I see it now.
Right.
Hey
So
guys.
we'll wait a couple minutes so more people can join before we get started. How are you doing today, Andre?
Good, good. Thank you. How are you?
Doing well, doing well. Evening where I am in Tbilisi.
It's 4 p.m. At my place. So yeah,
Yeah, 7 p.m. here.
almost evening.
So what do you think of the volatility of the market? It all went down, then we saw what yesterday things going back up drastically, on some tokens, some altcoins. What do you think's happening?
I think the normal thing is happening. So it is always like this. So I'm just so used to it. So I don't even check that really. So, well, that's not entirely true because I have a widget on my phone which shows prices for some major coins. So I basically see it constantly without checking daily. But I would say that I'm very, I would say, calm about this. So I just like don't pay attention to this because I know that there are
Hmm.
ups and downs, and it's a totally normal thing.
Yeah.
We you just usually need to wait if you're waiting something, but usually just it's totally fine.
Hmm. Hmm.
It happened in the past, it will be happening in the future, so
Yeah.
totally okay.
It's all about the long run. If you you're holding, if you,
Yeah,
believe
we
in
know
what
that's
you're
that's the
investing
future.
in.
We
Yeah.
believe in that, right? So if we believe that this tech, blockchain, crypto, etc., that's our future. And basically, we see this adoption, right?
Hmm.
So in the end, it's not about the token prices or coin prices. It's just about the adoption. And then, yep, regarding the prices, there will be ups and downs, but
Hmm.
it is totally fine. But still, every cycle there are lots of people who say that crypto is so over,
Yeah,
but then
yeah.
you see
You're
the next
hearing this.
cycle and it is so not over. And
Yeah.
sometimes I've seen a LinkedIn post recently, and it was saying something like, lots of people were saying that crypto is dead, or blockchain is dead or something. But at the same time, all the biggest companies like I don't know, PayPal, JP Morgan, and so on. So like I mean traditional companies
Hmm.
from the finance sector. All of them, they have lots of vacations, and the titles are like, I mean, open positions, and the
Hmm.
titles are like, sorry, vacations. They have vacations as well, but open positions, and their titles are like, blockchain specialist, blockchain engineer, and so on.
Hmm.
So on
Hmm.
one hand, they're saying that, or some people are saying that it is dead, but on the other, adoption is growing, and lots of big tech companies they use that.
Hmm.
So
And
it
like
is
yeah.
far from dead.
One example, one of our partners, Privy, right? They're an infrastructure project for, allowing embedded wallets. They
Yep,
got bought by Stripe, right? So you're also seeing, big companies like payment companies like Stripe buying up crypto companies right now.
correct,
So,
correct.
so there is definitely interest there. Yeah, agreed.
Yeah, it is.
Okay,
It is.
so
And we will see. We
yeah.
will see more in the future. But yeah, okay. Let's get back to
Let's
our
start. Okay,
AMA.
so hello everyone. I'll be helping moderate here, having this great conversation with Andre about the topic of xStocks. We have a bunch of community questions that you guys submitted, and so we're going to answer those. More specifically, Andre, as he's very knowledgeable in this space, but so I'm also going to learn from him. And but keep in mind, at the very end. of this AMA, we're going to showcase a secret code that you will be using for the Liberation Campaign. Now, Andre is going to talk a bit about the Liberation Campaign later, but this will give you 100 points added to a reward pool of $50,000 in Ston that you can join in on. We'll also announce three winners of who we chose as the best questions coming from the community. So definitely stick around, pay attention, learn a lot about what we're going to talk about xStocks. It's a very interesting subject about RWAs. I do believe there is a strong future where this will evolve. Let's begin. Andre, it's good to you to be here. How you doing? I would say hello. You are also our Chief
Hey
Business
guys.
Officer and CMO of Stonfi. So yeah.
Yeah, that's correct. But I'm a middleman, so it's just these are some
Oh,
titles, but
he's
the
being modest.
uh, uh, okay, thank you.
Mhm.
Yep. Hey guys, thank you for being here with us today. So as Ethan said, we'll be talking about X stocks. Uh, let's start.
Yeah. Okay, so okay, we'll just dive into it. What are X stocks? Maybe let's educate in simple terms what X stocks are. In simple terms, yeah.
Okay. Well, by the way, it seems that sometimes something is free that plays, okay? Because I
Okay,
don't
we
know
have a little
why,
bit of
but I
a
see something on my screen which
okay.
says that sometimes the connection is not so stable. Okay, it happens. Um, I wish that all the technology was so reliable or as reliable as blockchain is, but sometimes, these traditional tech like Wi-Fi and something, it doesn't work as intended. Okay,
Yeah.
so speaking about X stocks, X stocks are tokenized versions of real world assets and real world stocks that you can trade on chain, meaning that in simple terms, so there are companies. These companies, they issue stocks, right? Quite often, well, there are traditional ways to access these stocks, but some people don't have access to them or they don't want to use traditional stocks. And for these use cases, things like X stocks were created. So it's basically a way to bridge traditional stocks and to bring them on chain. And when they are on chain, when they exist on chain, they can be traded 24/7. They can be used on chain for different use cases in different protocols and so on. They can be integrated into DeFi strategies, etc., etc. So basically, it means that by having or purchasing tokenized versions of these stocks, you can get access to traditional market when for some reason you don't have this access. So it just makes lots of things easier, and also it provides new opportunities for those who hold these tokens. So again, to wrap it up, so there are equities, there are stocks, and they are not on chain. Of course, these are just like traditional um, records in offline databases. And then there is blockchain, and there are tokens which exist on these blockchains. And xStocks is a way to bring traditional stocks to these blockchains and make them on chain.
You mentioned about how on xStocks it's 24/7 trading, but with the traditional market, they're closed on the weekends. Maybe you can kind of let us know how does that work when markets are closed? People can still buy and sell xStocks on chain.
Yeah, that's correct. Because, well, first of all, you can't stop on-chain trading, right? Because these
Yeah.
protocols, they run 24/7 because blockchains work 24/7. And of course, users can still trade them. They can buy them, they can hold them, and do that during weekends as well. And there are so these companies that basically issue these tokenized assets, they use some technologies to, I would say, to make it possible. So let's say the biggest issue is basically, so when you're saying that something can't be traded, like traditional stock can't be traded 24/7, and tokenized versions can be traded 24/7. So the real problem is that the price can mismatch, right? So like the price doesn't move, the price of the traditional asset doesn't move on weekends.
Hmm.
And it moves, of course, during the at weekends on chain. So there are oracles which are used by these companies. So or the price is actually provided, and then there are all this market dynamic that changes the price. So there are always trading. Trading is like it's happening always 24/7, and these actors which trade them 24/7, they define the price. But then when the market opens, there are oracles which provide a new price, and then something changes, and then they trade it again. And
Hmm.
basically it means that the price will be always the same. So the price of a tracked asset, or the traditional one, and the price of the on-chain asset, they will stay the same.
Hmm. Okay,
But
that makes
using
sense.
all this, I would say a network of oracles and actors which are constantly trading.
Okay, interesting. Well, this now brings me kind of to the next question. So right now, xStocks in its form is really a trading instrument, right? That's what we see first. You mentioned the 24/7 access. It's borderless. You even mentioned, right? In a
Yep.
way, everyone has ownership. It's fractional ownership. Where do you think uh, xStocks will evolve, right? Like, what would be the net like? Are we looking at, a collateral layer, maybe some yield like an enhanced layer? I don't know. I'm imagining everything in layers,
Okay.
right? What happens evolves. It'd be very interesting to hear. Yeah, where does this go from here?
It goes everywhere, first of all, because, well, we have
Yeah.
we have much more opportunities here. Meaning that, well, in traditional finance world, so these opportunities are limited. So basically you can trade, you can hold, and you can get dividends. Basically, that's it. Okay, so also, well, it depends on the stock, but also you can get voting rights. In our crypto world, we have lots of other instruments because there are different types of protocols, there are trading instruments, there are yield generating protocols. You can use any asset or almost any asset as a collateral in DeFi and so on. So basically, it is well, the first thing which should be done and must be done, it's making all these tokens composable. Meaning by composable, I mean that they can be used in any protocol. So it means that they should be standard, they should align to some standard, and in this case, they can be used in different protocols. And basically, when we put it like this, it means that this question is not about X stocks. This question is not about any tokenized version of anything. This question is about composability and about the protocols that we have. So if this, we are speaking about X stocks, so let's use X stocks as an example. But of course, there are other tokenized assets, right? But in this case, it means that there are multiple protocols, in our case, on the TON blockchain, and different tokens can be used in these protocols in different ways. So the question is really the question is about the protocols. question is about the instruments. Because if this token, any xStocks token, can be used in any protocol, it means that they can be used as intended by these protocols. But speaking about what we have now, so now we have what we have on Onton. We have dexes, we have different swap applications and swap protocols. We have lending protocols. We have what else? Like probably these are the
Um,
biggest ones, right? Yeah, what else?
you
But we have some more. I have
as
forgotten, but we definitely have
trade, yeah, there's vaults as well, right?
vaults, right?
Yeah.
So sometimes you can stake your tokens, sometimes you can farm tokens, and so on. Meaning
Hmm.
that you can't do anything like that with the traditional stock,
That's
but you can
correct.
do
Yeah.
everything with a tokenized version of a traditional stock. So maybe we don't have it now because we are very early in terms of, there's this saying, like we are always saying that we are so early, but in this case,
Hmm.
in the context of xStocks, we're really very early because we launched them maybe a few months ago.
Hmm.
In our case, for Stonfi, it's mostly about swapping them, so people can swap them and hold them. But of course, there will be. I'm sure that these assets they will be used and integrated into other protocols, and this will provide additional capabilities. And we have like a wide range of these capabilities. So it'll be everything. But again, to wrap it up, trading, swapping, yield generation using as a collateral, maybe using in the vaults,
Hmm.
lending,
Also,
staking.
index funds, right? I can imagine,
Yep, correct.
just like how ETFs work in traditional market, exchange traded funds that group companies, stocks, right, that you invest directly into. That also could come about, right? Imagine you as a user creating your own ETF, but on chain, right? It's kind of cool. So there's a lot of possibilities
Kind
I,
of
I
cool,
see
but
in the
difficult.
future. Yeah,
Yeah,
but
kind of cool,
difficult.
but
Yeah.
hard to do that because, well, when we're speaking about any traditional stuff, it is heavily regulated, right?
Hmm. Hmm.
Even X stocks, although they are tokenized versions, but they are still regulated. And in this case, well, you can create some kind of an index fund. I mean, as a person, but then it comes to, I would say, uh, it comes to trust. So people
Hmm.
should trust you. Because usually the tech itself, it allows doing this stuff in a trustless manner, right? So you don't need to trust. Let's say when you trade anything on a DEX, you don't need to trust the counterparty because everything is done by the smart contracts, correct? But yeah, if anyone wants some person to buy any asset, in the end, it's about trust because this person must have some kind of a demand or a need to do that, to buy that stock. And if they don't
Hmm.
trust it, they won't do that. Right. But it's a totally different story for X stocks because it is not and these are not assets issued by some, I would say, a person, by some non-name company or something like that. They are issued by a regulated company, which is very transparent, which publishes all the reports and so on. So it's a totally different story. But again, technically, all the index funds and so on can be created, and I think that I'm sure that we will see more. And even now we have S&P 500, so we have some version of it, right?
Hmm. Yeah, yeah. With Spy, there is a pool right now on Stonfi that, and so
Right.
already people can start. I can see projects beginning that build to bring DeFi into the xStock segment. Okay, so we have our first community question.
Okay.
Um, so are xStocks custodial, synthetic, or fully backed? And who holds the underlying assets? You did dive just a little bit into that, but maybe you can say more about that.
Yeah, that's easy. They're backed one to one, meaning that they're not synthetic, they're not algorithmic. So basically, a company which issues them, which is called backed finance, they hold traditional stocks in their vaults. or but maybe the like vault is not the correct term for that, but they basically buy them and hold them,
Or yeah,
traditional
yeah,
stocks, and they issue tokenized versions on chain. So it's backed by real stocks, stocks held in custody.
yeah. So custodial backed. Yeah.
It is custodial backed, but speaking about the tokens, X stocks tokens, they're not custodial, meaning that you can trade them in using non-custodial surfaces like
Yep.
DEXs, wallets, and so on. Yeah.
Yeah. Good. All right. Our
Did I
follow-up.
answer? Yep. Yep. I thought so.
Yeah, you did. Because, and you were mentioning how they put out reports. They're pretty transparent and backed finance. It's Kraken, that big company, one of the largest, right? Exchanges out there.
They need to be transparent.
Is
I mean, like it's
Yeah.
they're regulated, meaning that they have to be transparent because otherwise they won't be allowed to do that. So
Hmm.
in this case, by the way, it's a very good thing because usually when we say like, "Hey guys, we are cypherpunks" or something like that, so we are like, we stand for decentralization. We don't like centralized solutions and so on, which is true first, but sometimes we need these centralized solutions. And in this case, this regulation is a very good thing because without that regulation, it is impossible to do a thing like this. So they can't exist without regulation, transparency, and so on. Meaning that there must be some kind of actor, like a regulation body, which basically like monitors them and so on. Because in this case, we can trust that um, these stocks are like they are legit, basically, right? So in this
Yeah.
case, it's good.
Now, I was checking out with the next community question. You literally just
Okay.
answered it because they were asking, is it one-to-one backed? And how can holders independently verify this transparency? And there you go, right?
Yep.
With backed
They
finance, being transparent of what they hold, they're legally compliant. So yeah,
yep.
that's a
So
good
there
thing
are
for the market.
That's correct. So there are multiple verifications. They report what they have. So they have to provide these reports because they have to. So it's very transparent. The supply on-chain supply is also very transparent because it is always transparent. And so yeah, so I would say it's some kind of a combination, or
Hmm.
maybe it combines the best of the two worlds of a
Hmm.
traditional TradFi, centralized, and so on, and DeFi, decentralized world. So we have not we basically them, but I would say we are just an application where these tokens can be traded. But uh, basically, they um, yeah they provide this combination of the best parts of these two worlds.
Yeah. Yeah, we have actually another interesting question. I'm also very interested too, what your opinion here. Now, you were mentioning about, different ways of yield would be, the liquidity pools, right? Adding to the pool, you earn yield that way. You have lending looping strategies where you put in you supply your X stock into a lending protocol. You actually earn because others will lend that you're lending it out. But you can also, take USDT, rebuy X stocks with it, right? There's those mechanics. There's risk involved, obviously, too, if you do it too much. Those are mechanics that can bring additional yield within this asset class. Now, realistically, do you see this outperforming dividend yield from
Okay.
traditional markets? And also, it would be interesting for you to tell us, because I remember reading that dividends are actually still like there is still dividends going into the stock mechanic from X stock. So
Correct.
the dividends are disappearing. So actually, let's do that
That are
first. first explain how actually xStocks is receiving the dividends, and then I'll be very curious if you think the yield mechanics of DeFi could outperform these traditional dividends.
Okay, got it.
Take it
It's a
away.
good question. It's a good question,
Yeah.
not the easiest one. Well, first of all, about the dividends. So, as you know, so when traditional companies they issue these stocks, sometimes they pay dividends, meaning that they just pay out some money to the holders. So, in theory, it can be done on chain, but it is not done like this. Because, well, I don't know the reasons really, but I think it is something about regulation or something. So they work in a different manner. A company, or in this case, the company, Back Finance, they hold these stocks, meaning that they get dividends. But then they use dividends to buy more stocks. So they basically reinvest dividends into these assets. But then something should happen on chain, right? So, and
Hmm.
what happens is it's called, like, technically it's called a scaling factor. So you, as a user, when you hold a tokenized stock, and when the dividends are paid to traditional stockholders, then uh, your stock appreciates. So it is just like a scaling factor is applied to your stock, and basically in the end you hold more. So you
Hmm.
don't get any, like, let's say, drop. You don't get any tokens sent to your wallet, nothing like that. But let's say before the dividends payout, you had, let's say, one stock, and after that you have 1.1. So
Hmm.
basically, you have more after the dividends are paid out. So it works like this. So I don't know all the technical stuff, but I know that, well, it is. I would say technically sophisticated stuff, because actually they even had to upgrade the Jeton standard on Ton to support that, because it didn't work like that in the past. And in this case, yes, well, it is supported, and assets which imply dividends in the real world, they can reflect that, but they reflect that using these scaling factor. So in the end, we just have more. Did I answer that regarding the
Yeah, that makes
dividends?
sense. Yeah. So you're actually it's basically putting it's not what's considered a buyback.
It's not a
But it's
buyback at
being
all. It's not a
but
buyback.
yeah, it's not a but
It's
it's being
reinvesting. It's reinvesting.
reinvesting it. Yeah.
Yeah, so the company gets fiat money, so they don't get additional stocks, but they get fiat money, but then they buy additional stocks. It's not a buyback because they're not buying
Hmm.
their stocks. They're buying
Yeah.
stocks of different company, right? So it's not a
Hmm.
buyback. It is just they go to market and they buy additional stocks and put them in custody. But
Hmm.
then they reflect that on chain, and this reflection is made via scaling factor.
Okay. Okay, gotcha. So then now
Yeah, but you
the
had the second
users are
question about
benefit the users then are benefit yeah, the users are benefiting from this dividend. At the same time now, Uh, will DeFi yield outperform, do you think, dividends in the when this right now, as you know, it's just a trading instrument. You know, DeFi for xStocks isn't really fully set up yet in time, but that's where it's going to evolve. What's your thoughts on that? How do you
Well,
see it
my
evolve?
thought is that potentially, yes, it can outperform. Well, of course, we don't know the future,
Hmm.
but if we just think about it and we just connect the dots, we understand that in theory, all these DeFi native yield can outperform dividends, because there are more opportunities. So now we're getting back to our previous question, or like the
Hmm.
question we had before. So in the real world with the traditional stocks, basically you have so they appreciate in price. So if everything goes fine with the market and with the company, then they go up in price, right? So the price is higher, and then you can get dividends. So basically, we have two options, but well, you combine them.
Hmm.
Uh, so that's how you earn by holding any traditional asset. In the DeFi world, first of all, you benefit from that as well. right?
Hmm.
Because again, the
Hmm.
price can, if it goes up in the real world, then it is reflected on chain and then it goes up on chain as well. First, second, if the dividends are paid out, in this case, this is again reflected via the scaling factor. And then you have additional opportunities which the traditional finance doesn't have. So you can, let's say, use them as a collateral in some lending and borrowing protocol. You can then you can get, let's say, USDT, and then you can use all these looping strategies. I do not advise to do that. Meaning that I'm not saying it's a bad thing. I'm not saying it's a good thing. I'm saying that everyone should do their own research because it can provide additional yields. But it also, when you get additional yields, you always get additional risks, right? So it is also always about this yield or risk return ratio. So everyone needs to think about that. Everyone needs to learn this stuff to understand it better. But in theory, and actually in practice, we just have more opportunities over here. So you can use the same asset in different protocols. You can provide them as, let's say, as liquidity in DeFi pools, and then you can get trading fees. You can use them in lending protocols. You can loop them. You can get additional incentives if there are incentives, because as you know,
Hmm.
we don't have them for xStocks, but for all the other, not all, but some of the assets that are added to Stonfi, there are, let's say, farming opportunities. So basically, you can lock your LP tokens and you can get additional tokens in return. We don't have all this in for traditional stocks, but we do
Hmm.
have this for the tokenized versions, meaning that we have more, which means that in theory, the yield can be higher. But again,
Hmm.
never never forget about the risks.
Yeah, I was because I think it's like the S&P 500 dividend is like, well, I don't know, 1.5% or something low. Maybe it's two at most. And so
Yep.
it's quite interesting. There's a huge competitive advantage, when you can potentially increase yield compared to traditional finance, right?
Yeah.
And
Yeah.
it really comes down
Plus,
to, yeah, dexes like Stonfi, right?
yeah.
Because and we are sharing some of the swap fees to the pool, the liquidity holders, right? You don't get this access in traditional markets, and so that's like just another access of yield generation. And in fact, you're usually charged more in traditional markets when you trade, right? So yeah.
Yeah. Yep. And also,
Oh.
by the way, so since we're speaking about sometimes these dividends can be low, and quite often there are no dividends at all, because
Mhm.
a company might choose not to pay any dividends, right? So they make these decision every year, and quite often they don't do that.
Mhm. Mhm. Yeah.
But in for X stocks, you can still use them in all these protocols, right?
Mhm.
So
Mhm.
basically, again, it just yeah, that's
But
it.
soon in all these protocols. They're not there yet, but soon. Okay.
They're not there yet, but
Yeah.
what I mean, we have some of them, meaning that, let's say,
Hmm.
even at Stonfi, so anyone can create a pool with any asset,
Yep.
right? If anyone creates a pool, if other users swap assets in this pool, then the creator of this pool gets trading fees. So, well, no, I'm not competent enough to speak about all the protocols and about even all the protocols on Ton, but I can speak for Stonfi. And in Stonfi, these assets are being used right now, and they can be used
Hmm.
for all these additional things. Uh, so some at least some protocols exist now, but we will see more in the future, definitely.
Yep. So, okay. So we definitely now know why a DeFi user should care about xStocks of all these opportunities there. Um, why, why bring tokenized stocks specifically to Ton? Because I know right now xStocks is on, it's only two other chains. I believe it's Solana and Ethereum
Yep.
the last time I checked,
Yep.
right?
Yep.
And then Ton. So, there's only a limited amount of chains that have access to this. Ton's one of them. Yeah, why specifically Ton? What is Ton? What do you think Ton offers for xStocks?
I'll get back to that in a sec. But I wanted to also add something to the previous question. So you were saying
Sure.
that now we understand why or what the reason is for for the users to use these assets, right? All these
Hmm.
class of assets. Also, we have uh, a very good reason, additional one to do that. So, of course, you know that we have actually billions of underbanked or unbanked people in different countries. It means that lots of people they just don't have access to traditional stock market. They just
Hmm.
they don't have access to traditional brokers. They can't open accounts there. Even if they can, well, they can be banned sometimes because of all the crazy stuff which we see in the world, right? So they could be sanctioned, they could be everything, and so on. So meaning that we have billions of users which have who have very limited access to traditional financial market. In
Hmm.
this case, it's a different story because it is trustless, meaning that these assets they are available everywhere, and I think it's a very good reason um, for their existence, basically. So
Hmm.
it's another one.
Yeah.
And
It's very
getting back
lib
to the
very
question. Yep,
liberating, Even with
it is.
Africa, a lot of
That's what
people
I
are
was saying.
unbanked. Yeah, even
Correct.
in Africa, they
Correct.
unbanked there. It's good for humanity. Yeah.
Definitely. That's what we mean by portfolio liberation,
Yeah.
right?
Yeah.
Okay. And getting back to so what did you ask? White on?
Oh, Whiton, yeah. Well, there's xStocks that came on to Solana, and this is all quite new. I think it was just last year they started it came on Solana on Ethereum, and now it's Ton. Um, so why bring tokenized stocks specifically to Ton?
Um, well, first of all, for us, it's a good thing because we operate on Ton. So definitely we didn't have any choice. So basically we didn't have any choice,
Yeah.
but at the same time, it is our choice. And speaking about, well, maybe I can rephrase it like, um, uh, why, um, yeah, the question is why Ton is good, a good distribution let's say mechanism or a layer or like
Yeah.
distribution
That's
something for
hmm
X stocks. So basically that's the answer because it is good for the distribution. So Ton has, I would say, a unique distribution layer through Telegram. Okay, so as you know, of course, there is Telegram, there is Ton. So Ton is actually, we can call it a native blockchain for Telegram. It has a strong user base. I mean, both Telegram and Ton, they both have strong user base. So I would say that for them, for xStocks and for any real world asset, it is a distribution strategy. And basically that's why I don't know why, but I think that they chose Solana for that because Solana is so popular now. So lots of people like
hmm
millions, hundreds of millions of people use it daily. And maybe it is the reason why they chose Solana. But I think that the strong Ton and Telegram user base is the reason why they chose Ton because we didn't choose it, meaning that we are not X stocks, we do not represent backed finance and so on. We just, but when there is a new asset on Ton, we support it because we want our users and we want Ton users to get access to these assets. So that's why I think that it was a good choice for them because, well, we believe in Ton. We believe that, yeah, okay, there are ups and downs as always, but we believe in Ton and we believe that Ton has an amazing user base. It is big and I would say it is very committed. And Then we have an additional point, it's Telegram. So yes, there are use cases, but we will see, I mean, like the existing use cases when Telegram and so on are integrated, but we will see more use cases in the future. And it means that it just provides all this distribution network. And I think it's a very wise decision for those who issue any assets any tokens to go to where market lives. And market lives on Ton and Telegram, and
Hmm.
that's good for them. That's good for Ton. That's good for Telegram. That's good for us.
Hmm.
So it's good
And
for
also to
everyone. And
add,
course, it is good for
yeah.
users because they get access to that, and they get access to that without leaving their favorite ecosystem.
Hmm.
Because if there are heavy Ton users, if they are Telegram users, and we all are, then it's just so easy to get access to something without leaving these applications that you use daily, right?
Yeah. And
Everyone benefits.
it matches Telegram's brand, right? Of liberation in a way, right? Of sort of freedom.
Yeah,
You hear Pavel Durov
yeah,
say, right?
yeah, yeah.
So it really is fitting that,
I'm smiling, but I believe in that. I
yeah,
mean that
I do
we
too.
can,
Yeah, yeah,
yeah.
yeah, yeah. No, agreed. Okay, so we got another question here. What makes Stonfi a good place for X stocks to live, Andre?
Well, first of all, speaking about Ton, I believe that Stonfi is a good place for everything. So not just xStocks. So any asset should go to Stonfi. Any application developer should use Stonfi. I mean, our protocols, Omniston, and so on. Basically, anyone who is considering Ton should use our tech. So it goes without saying that Stonfi is a
Yeah.
good place for everything and everyone. But speaking specifically about X stocks, well, first of all, we are the deepest liquidity layer on Ton, meaning that we have lots of users, we have lots of liquidity providers, we have resolvers for our Omniston protocol, and so on. And so we are speaking about the variety of tokens that can be swapped at Stonefire, and we're speaking about the deep liquidity which can be used for that, because without deep liquidity, you can't get the best price. So in our case, we provide that. So we provide these deep liquidity, actually the deepest liquidity on Ton. And if any asset is going um, to be swapped efficiently on Ton, they need strong and deep liquidity. And in our case, it is possible. So I believe that we are the default solution currently. So
Mhm.
if anyone just tries to choose what protocol to use, which protocol to provide liquidity to, which protocol to integrate in their applications, and which protocol to deploy your liquidity when you are let's say, a resolver, then of course Stonefy is the best place to do that. Um, so I think that's it. Do you agree, by the way?
Yeah,
Do you
I
have any
agree. I
other?
agree.
I mean, of
Yeah,
course you agree,
well,
but do you have
yeah, yeah.
any other
Well,
like
if
idea?
yeah, yeah, especially like because of our, our swap routing, right? So the with Omniston, it it finds the best routes even on different dexes, right?
Correct,
So
correct.
as xstocks will grow, it will be added to different dex pools like
Yeah,
Tonko, for example. You got DDust. And so the good thing about with Stonfi and OmniSton, if that route becomes the most affordable, that's going to dedust, we'll find that route for that user. So we give the
yep,
the cheapest price. So it's something really what's great about Stonfi. We're not just a DEX, but we're an aggregator as well for other DEXs
yeah,
too.
yeah, correct. Good point. Thanks.
Yeah. Okay, so we got a community question here.
Okay.
Will there be an option to buy X stocks not only with USDT but also with TON?
Um, in theory, there is this option now, but actually depends on the liquidity pools. So currently, most of the X stocks tokens, they are swapped via Omniston and resolvers. And basically they, not us, but um, uh, they define how these tokens can be swapped. So we don't basically define that, meaning that we provide the tech, we provide the infrastructure for that. But there are resolvers, and resolvers are the guys who basically say, hey, if anyone wants to swap their USDT for xStocks, I will do that. I want to do that. And if and when they say that, when they say we are eager to swap xStocks to, let's say, TON, then the support will automatically um, uh, it'll automatically exist on Stonfi. So this thing is about resolvers, which is not the easiest way for a user, because basically an end user just can't be a resolver, because resolver is a business, right? But then any user, because as you know, anyone can create any pool on Stonfi. Any user can basically create any pool, and this pool can be Tom, Tesla, or something, right? And in this case, this asset can be swapped for Tom, and vice versa. And we have, I don't know, I don't know how many pools we have now, because mostly xStocks are swapped using Omniston and resolvers liquidity. But we had S&P 500 pool from the very beginning. Maybe we have more now, but I'm not so sure about the trading pairs, because, well, it depends on the, let's say, pool creator. So if anyone decides that they want to create a ton Tesla or Ton Apple pool, then it'll work with then these tokens, they can be swapped for Ton. If no one wants to do that, then it won't be possible. But if this question is about the plans of our resolvers to support Ton, I don't have this answer currently, because it actually depends on them. So they decide what assets to use. And as of now, they decided to use USDT only. But I don't think it's a problem, because, well, if you hold TON but you want to buy xStocks, well, you can just, you will have to have an additional step. You will have to sell your TON and buy USDT, but it is done like this, right? In a second. So you just swap it to USDT, then you swap it to Tesla. So yep. We'll see. But so
Yeah.
the answer is we'll see in the future, because yeah, it just doesn't multiple actors define how it works, and we are not the only actor. But we support any token, any trading pair. Our infrastructure is token agnostic. Okay?
And if you think about the one pool we have, SPY, right, the S&P
Yep.
500 ETF, that being matched with the dollar is also a safer way to even hold into a pool, right? Because you have a dollar that's quite stable. S&P 500 is always known to be quite stable. Who knows? There could be someday a market crash, right? But it's always been known with an 8% yearly growth, decade after decade. So it is like also safer, instead of maybe having TON that could be a little bit more volatile with holding
Yep.
in a pool.
Yep. Correct.
So
I
this type
agree.
of,
Yep.
yeah. So yeah. Okay. Now, you answered the next community question about, can I provide liquidity with xStock? Yes. You can, but you would, like you were mentioning, we should probably better to provide to the SPY USDT pool, because currently the other pools I think are quite low in liquidity, because actually you have a resolver that supplies liquidity separately for those
Yep.
USDT TON
Yep.
swaps. In the future, I do believe, as xStocks grow, we're going to see those pools. But right now, if you do want to recommend anyone that wants to throw into any of these pools, do that for the SPY USDT pair pool.
Correct.
Um, okay, another community question. For someone just entering Ton DeFi, should xStocks be treated more like a long-term investment, similar to traditional equities, or as part of an active DeFi yield strategy? This kind of combines what we were talking before. Yeah.
Okay. So again, I'm not advising anything, so it's not a financial advice, just guys, do your own research, please. But in theory, it can be both. So first, of course, you can hold them just as you can hold traditional assets long term, right? If you want to get exposure to this market, if you want to, let's say, basically, a stock is it's equity, right? So it's a part, like it's your right. Uh, to own a part of a company, right? So you just have some legal is different thing. I mean traditional stocks, but in theory, not in theory, but in a sense, it is like the whole idea is that you own this company, right? So if you believe that these market um, will grow, if you believe that this company will feel better in the future, then of course it's always a good idea to hold like a part of this company. Like you want to own a piece of that company, right? And usually people hold these in these cases they usually hold long term. So is the first part. The second part is um, like to use and not to use tokenized versions in DeFi tools, strategies, and so on. And well, you can. Of course, I believe it brings more risks because first of all, you need to understand all these protocols. You need to understand how it works. You need to you need to be aware of all the risks, but of course you can do that. So it is both. So for some users, it is, or not for some users, but for all the users, long-term holding is just long-term exposure. But if you want to have some additional yield, then you can use them in DeFi as well.
Okay. Nice. Good answer. Okay. This will be the last community question, and then we'll dive into the liberation campaign. I think we're going a little long, but I think it's okay. We got more time. Okay, so this question is, if I presently hold TON plus stable coins for yield, how can adding X stocks change my portfolio's risk profile during market downturns? Is the goal diversification, yield enhancement, or capital efficiency?
Um, Well, yes, it is about diversification. So it is fair for any market. It is fair for any well for any business stuff, right? You want to diversify.
Hmm.
So if you hold different types of assets, if you hold different tokens and so on, usually you want to diversify because diversification means lower risks. So basically, you just distribute your risks across different assets and across different asset classes. Uh, so I can't say how it affects your risk exposure or something because it depends on your portfolio because it'll be different for every person because every person holds a different portfolio. But I believe that it is a good diversification strategy. Basically, it's not about holding all the eggs in the same basket. So you have something there, you have something there, and so on. And when, let's say, there is a downturn in traditional market, let's say there is some kind of a crash or something, okay, but you don't lose everything because you have exposure in different markets. But the problem is that it's also about the market's correlation. And I believe that they are very correlated now. Because in the past we
Hmm.
saw like when the let's say traditional indices or ETFs or something, they were going up and crypto was going down, or vice versa. So they were not that correlated.
Hmm.
Now I
But
think they are more correlated because all the institutions that hold crypto and so on. So there are dozens of millions of reasons for that.
mhm,
But still, it doesn't mean that one should not diversify their portfolio. It
mhm,
is always a good thing. It's not maybe well, of course, some sophisticated guys, they have different answers to that question because, well, they have different strategy. Sometimes they want to go all in, like, to just have a stake or something, and they just like, I believe in that, I'll go all in, and quite often they lose everything.
mhm,
But yeah, I believe some guys know what they do. They are ready for that. They're prepared for that. But I believe that most people just don't understand that.
mhm.
And when they do that, in the end, they're not happy. And so I have forgotten the question, by the way, but I think it's about diversification
Yeah,
and
yeah.
market correlation. But even if the markets are correlated, it is always a
Hmm.
good thing to diversify your portfolio.
Hmm. I remember like reading about a strategy of, it was like the crypto industry represents, I don't know what it is right now, 4% of the financial market, right? So the
Yeah,
idea is put 4% of your assets you've saved into crypto, right? Because that would be the
yeah,
representation. But I don't know if that would be the correct way of doing it. But
yeah.
there's
It
like,
depends on it depends on your risk appetite, but um, definitely crypto guys, they have high exposure in crypto, definitely.
mhm, mhm. Yeah, yeah, no, it's true.
So I believe this 4 or 5% rule is mostly for those
Nope.
who prefer lower risks and
Mhm,
those who
mhm,
mostly hold traditional assets, and also they have diversification inside their traditional asset portfolio, so they can hold stocks, but they also hold bonds, right?
mhm,
Which
mhm, mhm,
are and risks for bonds are lower than for stocks, and so and this ratio, it depends on their risk appetite and their like risk exposure and so on. So it's very different for everyone. But for them, those who are like, these like traditional finance guys, yeah, they usually say 5% because I believe why 5%. It's not because of the crypto capitalization. It's about like 5% is something you can afford to lose. So that's
mhm,
what they're
mhm,
saying, that if you allocate 5% of your resources into something, and even if something goes south, then and you lose it, well, it's okay, right? You can live
mhm.
with that.
Yeah.
But all the crypto guys that I know, they have much higher exposure in crypto because they believe in crypto. They believe that
Mhm,
not just the prices, but the tech. Because
mhm,
that's what we discussed in the beginning. Say that all the big tech companies, they adopt blockchain, and they will be adopting that in the future, and we will have more companies that use blockchain for different purposes. And it'll definitely reflect. It will be reflected somehow in the coins prices. So people just believe in that, and that's why
mhm,
that's
mhm.
what they do. But I also think that it works like the same way for any market, any traditional stuff. It's like basically all the fiat and all the stock markets, they operate on top of these beliefs, right? People
Mhm. Yep.
believe that something will stay forever, that something will go up, that something will be more expensive in the future. They just believe in that, and when we have lots of people who believe in the same thing, they just buy it and they drive the price up, right?
Mhm, mhm. Yeah,
Basically, the
yeah.
same thing happens with crypto. It is always about beliefs because with no fiat money is backed by gold anymore, right? So
Yeah, yeah.
it is just a combination of people's beliefs and expectations.
Yeah, yeah. 100% true. Um,
It's not about my. I think it's about the YouTube streaming. So just this stream stopped.
we have to reopen it. Okay, so
No,
there's no live streaming.
5 minutes or 2 minutes. I don't know.
It'll
We need
be,
to write it. I don't have any paper.
oh, in 2 minutes is what?
Fixed. No, no, I'm just saying that we need to wait a couple of minutes because I see that they are
Mm,
fixing that.
okay.
So are we back? I see that is we are okay, good, good. We are back. Awesome.
Okay.
So we were discussing the what?
The
Yep. So
liberation campaign, yeah.
the
And so you're
liberation campaign.
about,
It's an
yeah.
it's an educational campaign. We want as many people as possible to know this stuff. So it's a new class of assets available at Stonfi. We feel that we need to tell people about that. We feel that we need to educate them about that, and so on. So basically, we provide a bunch of educational materials, and to make it, I would say, funny, not funny, but how to say that in English, more motivating or something. We
Yeah.
provide price budget for that, a reward budget.
Hmm.
But the initial idea is not about that. The initial idea is
Hmm.
not about, having any drops or something. The idea is that we have this new stuff. Stonfi is known for educating our users, right? So
Hmm.
we have guides, we have uh, a blog with lots of educational materials. We constantly produce lots of educational assets because that's what we want to do. We believe that's our mission, and this campaign is part of that mission. So it is about education, and it is about getting familiar with xStocks as a new asset class, and it is about trying them in the real in a real product,
Hmm.
not just theoretically. Like read this article, please. We do that, but after you do that, you
Hmm.
can try them, you can use them in our product. So basically, that's it.
So you can technically get paid to learn, right? Normally when you go to school, you
Yes,
have to pay
correct,
to learn. So
correct.
it's fun and interesting to learn something brand like really new. Like you'll be understanding something that's cutting edge right now.
It's
So
a reward. It's a reward you get for like being in a class.
mhm. Okay, and then so why didn't we just actually launch xStocks quietly? Why make a whole campaign around it in general?
Because we want to educate.
Want to
Because
educate. Yeah, it's true.
of course,
Yeah.
first of all, we want well, that's the primary reason. By the way, it's not our first educational campaign. We do that
Hmm.
sometimes, and of course, we just can't educate users about every token that is added to Stonefy because, well, like it just doesn't make any sense. But because when they belong to the same asset class, you need to educate once. But we educate users about new capabilities in Stonefy application and
Hmm.
for Stonefy protocol and for different products. Um, and the same is true for xStocks, but it's a new asset class, and if no one knows how to use it, if no one understands how it works, then it won't be good, right? Because well, people just will miss additional opportunities. But we don't want that. We don't want them to miss these opportunities. So that's why we um create and hold these educational campaigns.
Hmm. And how can someone listening right now get started? How or where actually can they get started in this liberation campaign?
They need to go to the Stonefy board I think that we'll have a link, but of course we have these
Hmm.
links everywhere on our website and everywhere. They can go there and just launch the campaign. We have a button there, we have a command there, and we will provide a link which brings
Hmm.
you directly to this campaign.
And this is a Telegram bot, right? So you
Correct.
access this on
Telegram bot.
Telegram,
Cross
and
Telegram.
very soon, our colleague Arena is going to be posting that both on YouTube and on X, following our talk right now. So, guys, pay
Okay.
attention to that link because we will be showing you the secret code very soon. Now, this is the last question, and then we'll wrap it up. I'm going to show the secret code. We're going to announce the three winners that ask questions, and they're going to earn STON from that win. And so this will be the last community question. With the $50,000 portfolio liberation campaign, are you incentivizing behavior that builds lasting on-chain portfolio habits, or is this just user acquisition? And then he adds on, or her, what transformation do you ultimately want to see in how users manage assets on Ton?
We are not incentivizing this. We incentivize education. So, yes, there are different strategies which can be used when people buy and hold any asset. Uh, this is all true for xStocks. This is all true for this campaign, but we are not incentivizing any asset connected behavior. We just provide some um, reward budget for getting educated. Well, just like the universities do. So you get in class, but also you get, how do you call it? I don't know the word for that, but you get
Mm-hmm.
paid a little, right? So
Mm-hmm.
that's what we do because we want to reward those who um, uh, who like have resources and have a will and are ready and eager to learn new stuff.
Mm-hmm.
We see it as our mission, and that's what we do with these. Um, that's what we incentivize. But answering the question about the strategies, it can be everything. So, like for everyone, it is good to know how these assets work. It is good to diversify one's portfolio. And then, depending on your strategy, depending on your personal um, risk appetite and so on, you can choose either to hold or either to swap, or either to hold or to swap, and so on. But it depends. It depends on you. It depends on how you, according to your own research, decide how to interact with these assets. Hope that answers.
Yeah, that's okay. So, guys, check X right now and check YouTube. In the comments, our colleague is going to post the bot. Now I'm going to share my screen to showcase the code. And what you'll be doing is once you click that link, so this all happens after actually we stop the YouTube for 15 minutes. You'll be able to use that code, get 100 points to your added points score on the Liberation campaign. By all you have to do is add this code. Connect your wallet on with Stonfi, and then you're adding your code. All the instructions on the bot. Let me share my screen. Are we good?
Let's wait for the confirmations in the chat because I think there is some delay.
Okay.
Because I have a live chat over here, just to see if everything is fine. Okay, I think that I see the link,
Okay. So
but I don't
do
see
is
the code. I don't see the code yet. Maybe just maybe it's just me.
yeah, it's probably a 30-second delay.
Okay, got it.
Yep. So
Is
all
that?
right, guys. So that do a screenshot. Copy this code. We'll show it one more time after I scroll down. But let's announce the winners that are going to win Ston. So the first one is the question on how can adding stocks change my portfolio's risk profile one, and that is at Profuzi, our first winner. Our second winner that was asking about we just had the portfolio liberation campaign that you just answered to Cardi 2001. And last but not least, uh, yep, that was about if there would be more on Ton when we were talking about the pools, and that was that crypto PJs. It's a good name. Um, so cool. And let me share one more time. I'll leave, let's see. So yes, thank you for your questions. Okay. And one last time, go ahead, do a screenshot. So just remember, after we turn this YouTube channel off, you'll have 15 minutes to add this code phrase in the Stonfi bot to earn your 100 points. As for the three winners, we'll be reaching out to you tomorrow to give you the Ston reward. All right.
Awesome. Thank
It
you,
was
guys.
great
Great
conversation, Andre.
conversation. Thank you,
Yeah, yeah.
Ethan. It was
And great
awesome.
questions from the
Loved it.
community. Yeah, yeah. It's pretty cool. I'm super excited about xStocks. So I'm also I was really interesting when we talked about like how it's going to evolve as well. That's going to be neat. Yeah. Okay.
Awesome.
All right. So I think this has been on long enough for everyone to do a screenshot. So thanks again for everyone for tuning in. Thanks, Andre, for coming on.
Thank
We'll
you.
see you guys soon at our next live stream on YouTube. Thanks, everyone.
Awesome. Awesome. Awesome.
All
Thank
right.
you. Bye.
Bye.